What's going on, guys? Welcome back to the channel. Today's video, I'm going to be going through all the trades that we took this week, or most of the trades, at least whatever I've saved on these screenshots that I have. But yeah, I'm just going to be going through the trades that we took this week and how we were able to stay on the right side of the market the entire week. I mean, it's very simple how this works. We're using an options chart to gauge our trades and gauge the trend in the market. Not many people trade like this at all. Only like very few people that know of this style of trading, and it kind of blows my mind because in my opinion it is the best way to trade, simplest way to trade. It's the most accurate way of trading. There's no other strategy out there that will read the market as well as the system, it's called. That's what I'm always referencing when I the strategy. It's called the system. So it has to do with the 10-50 SMA on options chart. And I could go into I already have a video on like how the strategy works, so I'm not really gonna go totally in depth of how to do it exactly. If you want to learn how to do that, there's a video on my YouTube. But yeah, I mean, we're using 0-day contracts for our entries, and then the Friday contracts on the 30-minute give us the higher time frame trend. So if you guys watch my videos from this week, I mean, the whole entire time we're trending on the 30-minute here. You can see the trend in the market this entire week. We were actually like 2 weeks we were trending bearish. And how do we know we're trending bearish? Well, we have our puts for the week that we selected on Monday. On Friday you pick new ones, so you might see this this contract changed in certain screenshots that I have. But we pick contracts on Friday or on Monday, we use them to Thursday, and then on Friday we pick new ones and then only use those for Friday. And then whatever the open is on Monday, they may be the same as Friday, they may be different. Just depends where we open on Friday, or on Monday. So use them from Monday to Thursday, and then Friday you use them for Friday, and then Monday to Thursday use them for Friday, Monday to Thursday use them for Friday. So that's that's the cycle of how you pick them. But 0 days, obviously you pick every single day because there's 0-day contracts. But back to this chart, 30-minute is cross on the puts. 10's above the 50. That's what a cross is. 10 is above the 50 with the 50 SMA curling up or flat. It's better if it's curling up though. So you can see we pretty much held this 50 SMA the entire way up, except we had this little break below on Monday, and then we ended up recrossing on the 30-minute. And the reason for that was because the higher time frames. I mean, the higher time frames were sitting at massive support areas on puts, and since these are puts, these are very big resistance areas on SPY, QQQ, whatever you want to be looking at. But you could see all the time frames were crossed. The daily, there's really nothing on the daily that will give you that much bias because there's no 50 SMA. But this daily 10 held. It's nothing too important there, but 30-minute tells us the main trend. And what do we look for when the 30-minute is trending bearish? We look for a 0 DT cross on puts. That's like the most ideal trade right there, is a 0 DT cross in the direction of the 30-minute trend on the Friday contracts. And since we're trending bearish on the Friday contracts, we're going to be looking for a put cross. That's our most ideal trade. Another trade you could take is a 50 dip after we get that cross, and that's actually a trade that I took today. I'm probably going to save that for tomorrow's video, little recap of Friday for tomorrow. But yeah, I'm gonna save that for tomorrow's video, and then just go over all the trades that we took this week. So 50 dip on the 0 days after the cross, we have the 0 DT cross, and then we have a 50 rejection on the call side. Since the market's bearish, it is likely that 50 SMA on the 0-day chart is going to reject because that's an intraday pivot, and a lot of the times when we are trending bearish, that chart's not going to go across on the 0 days for the bulls because the higher time frame trend is bearish. So a lot of times that 0 DT 50 is going to reject, and it could provide a ton of points. I mean, that's a very good trade to take when we are in a trending market, or in this case bearish market, is the rejection at the 50 SMA on the call side. And if we look here, these are some of the trades that we took. So this is kind of going backwards. So this is from most recent until Monday. So from Thursday to Monday, we're going backwards here. So again, what did I just say? The most ideal trade is a 0 DT cross in the direction of the trend. So This is actually 2 trades right here. I went over this in yesterday's video, I think, or the day before, something like that. But I ended up taking a small loss on this cross over here because this 50 SMA wasn't entirely, you know, up the whole time. So on this green candle right here, it looked really good. And this candle opened, it still looked good. And then once this candle flipped red, this 50 ended up turning down, and that's where I exited the trade for a small loss. You know, that's one of the things you need with the 0DT cross. We need the 10 to go above the 50, but very important factor is the direction that the 50 SMA is facing, because if it's sloped down, it is not a valid trade to take. A lot of people that trade the system, you know, most people don't trade it right. They really don't. You have to understand the correct way to trade the system with playing these crosses, knowing what trades are ideal, which ones you don't want to be taking, things like that. But yeah, I mean, this was a valid trade. I mean, the 50 was curling up at one point, and then this candle ended up pushing it down, so that's where I got out. And then this chart went negative, so 10's going below the 50 here. There's no trade to take here because we know the market is trending bearish on the higher time frame. So the best case scenario here is to wait for this cross to happen again, and that's exactly what happened. The 10 went above the 50 right here, and look at the move we got. This was a massive move. I mean, very, very big move. You use this 10 SMA as your trailing stop if you want, you know, if you're not all out by then. But, you know, what I like to do is use that 10 SMA as a stop loss on my runners to know when to, like, fully cut out the position. But, I mean, by the time this already pull back to the 10, you're probably already up like 150 points on NQ. So, I mean, if you were still holding some, great. If not, I mean, you still caught a big move. What else do we have here? Again, I just went over like the trades you want to be taking in a bearish market. So this is the 50 dip on the 0-day chart. This is the same chart, these two. This was just the cross and then the 50 dip after the cross. So, you know, you can see we hit the 10 and this went up higher or lower in this case since these are puts, and then we broke below the 10, and that's where, you know, your trailing stop gets hit, you close out your position, and then you wait for this 50 SMA to reshort. And, you know, since that 30-minute is trending, which is a very important factor. So when the 30-minute is trending, you're able to buy this 50 SMA dip on those contracts in the direction of the trend. But when we are neutral, you do not buy this 50 dip. If the market wasn't trending bearish and we were neutral, which pretty much means that we're not crossed on either side of the premium. So the 10 is below the 50 SMA on both sides of the premium. That means we're neutral. There's no trend in the market, so you don't buy this 50 dip if we were neutral. We were bearish in this case, but just saying hypothetically, if the market was neutral on this chart, you would not buy this dip, but you would wait for the closure back above the 10 SMA, because the reason for that is when we're neutral, it's likely that you know, the 0-day cross doesn't continue like going because there's no trend. So more times than not, the 50 SMA does break, and if it does hold, okay, you wait for the closure above the 10 to re-enter. So in a trending market, you buy the 50 dip. In a neutral market, you wait for a closure back above the 10 SMA right here, which is the green line. So yeah, we ended up shorting this though down in here because we know the market's trading bearish. We get a 50 dip on the 0DT puts, and look at the move we got. This was a massive move, another like 150 point move on NQ. That with the 0-day cross, that probably gave you like 300 points right there. And I mean, you know, this week the system gave a boatload of points. I mean, we probably got well over 500 points on NQ with the system, probably even more than that, maybe close to 1,000 with just how big the moves were. I mean, the volatility has been crazy, so the moves have been a lot bigger, which I love. But I mean, yeah, I mean, crazy week for sure. But what day was this? The 5th. So this is one of those instances where you can take a 0DT cross on the opposite side of the premium while we're trending. So we were trending bearish this, you know, entire week, but when we do trend super hard and then on the 30-minute there becomes a big gap of where price is versus where the 50 SMA is on the 30-minute chart. So when there's a massive gap between where price is and the 30-minute 50 is, you could take a 0DT cross in this case on the call side, because there's room to go to that 30-minute 50. So, you know, this was a trade you could have taken. I'm pretty sure this was on Thursday. The calls ended up crossing right here. 10 went above the 50. The 50 started curling right down in this area right when we closed back above the 10. So you could have went long right there, and then look at the move we got. I mean, it's very, very simple. We're just playing the 10 crossing the 50, 50's got to be flat or curling up. It's not rocket science. I mean, there is so many other strategy out there that have crazy terminology. There's like 1,000 different models, which is like ICT is what I'm referring to. I mean, there's too many, like, it's information overload for like ICT in my opinion. And then, you know, you have your classic support and resistance where, you know, I mean, I'm not a big fan of it because, you know, you don't really have an edge with doing that in my opinion. I feel like with this way of trading, you really have an edge because when the market moves and we're trending, it is very easy to, you know, take trades. I mean, and then when we're in the neutral market, that's when you're like risk off and where you're sizing a little bit less because you know there's no main trend in the market. So, you know, if you could squeeze out some points on a little cross, okay, you know, you're not looking for any crazy moves when we're neutral. And that's where the system shines. I mean, when we're in a trending market, like I said, the last 2 weeks have been very easy because we have this type of system. The system does the best when we're moving, like a lot, and we're gonna catch it. So, you know, this cross right here, look at. I mean, it's very simple. Tell me this is like rocket science. It's not. We're playing 10 crossing the 50, 50's curling up. We, you know, close above the 10. This closure above the 10 was pretty much where the 50 started curling. So that'd be your entry point. Look at the move you get. Very simple. I mean, this probably I don't really know the points on this, but I mean probably well over 100 points, just like the other trades. I mean, it's really simple stuff. So, you know, and also the system is very situational. There's some times where, yeah, like by the rule of, you know, like the rules of the system, this isn't a trade you take because, you know, we're in a trending market on the put side. So why are we taking a call cross? Well, you know, in certain scenarios you could take this because when there's, you know, it doesn't happen that often, but when there's a massive gap, like I said, between where prices and the 50 SMA is on the 30-minute chart, on the put side, we could take a cross, you know, pretty much in between where price is and where the 50 is on the 30 minutes. So, you know, that's why you could take this cross because there's room to run into that support area on puts. So, yeah, that's the reason behind that. Because we did play a few call crosses this week. I think I played 2 or 3 of them, and they all worked out beautifully. So, yeah, that was that. And then this was another. This was a put cross. So, I actually ended up taking a loss on this initially because, again, it was like that other chart I showed you guys with the 0DT cross on puts back in here. Like this trade right here is pretty much the same thing. The 50 ended up curling, which sometimes does happen. It curls a little bit and then it'll get slammed back down like on the next candle, and that's where you just got to be able to cut your loss really quickly. That's, you know, I mean, these losses are very small, like 30 points maybe, if that. And in this type of market we've been in, 30 points is nothing. Our winners are well over 100, and, you know, that's why, again, the system's really good. It gives us big runners. Again, another thing I see a lot of people do when they trade the system, they don't know how to hold or take profits. A lot of people I see, they take profits way too quick. You know, like when we're in a trending market, you could expect a lot more of a move, a lot bigger of a move. Like on zero, if you're trading options, you like, I wouldn't be selling less than like 40%. Like 30% is the bare minimum that I would start trimming at. But typically, you know, you could get like 40 to 70 to 80% in my opinion. Like when we're in a trending market, I would probably be holding that until 40 to 60% to take a trim and then leave the rest running. So, yeah, again, 10 went above the 50. 50 started curling. Like I said, we initially stopped out for like, I don't know, 30 points, and then it ended up curling back up really nicely, and then, you know, we got to move down, and I'm not sure how many points it gave again, but probably, I think that might have gave like 70 to 80 on NQ, so, you know, solid move off of there. And then this is where I say, you know, that 30-minute 50 is a massive pivot in the market, because if you could just look at the previous chart, I mean, the 50 SMA is a major pivot, major pivot, and every time we hit that 50, and again with this picture right here, that 50 is trending up super hard, and when it's sloped up like that, it's a massive support area. And look at that bounce we gave. I'm pretty sure this gave like a 300 point dump on NQ from that 50 SMA. So again, that 50 SMA is a major pivot when we are crossed. Even when we're in a neutral market, the 50 SMA is a major pivot. When it's, you know, sloped up like this is a massive support. If we're neutral and we're like under the 50 SMA and we go towards the 50 SMA, the more sloped down it is the heavier the resistance. So it's pretty much the opposite of this. The 50 SMA is sloped up super hard, very strong support. If we're like under it in a neutral market and it's sloped down hard, it's a massive resistance. So yeah, again, 30-minute 50, massive spot there. And then this was another call cross that ended up playing out. 10 went above the 50. You wait for that 50 to curl. Happened somewhere probably on this green candle right here. And then, we get a nice move out of it. And then this was another trade earlier in the week. The puts were crossed like right at open. You could have waited for this 10 reclaim right here, because this 50 dip didn't really get close enough to the 50 for my liking, and it still had room to go. So once we closed above the 10, you could have found an entry at this 10 SMA, or just wait for a 50 dip, but the 50 dip never came. And like I said, the 10 SMA is your spot to trail your stop loss, and if you trailed it that entire way, you got a massive move on NQ or whatever you're trading. So yeah, another great trade, and that's the continuation. Or no, that's a different chart. My bad. But again, same scenario. These puts ended up crossing. 10 went above the 50. 50's curling up. Your ultimate stop loss is a closure below the 50. On this trade, this was a funky looking chart. I won't lie. The 10 went above the 50. And then once, that 50 ended up curling, probably down in this area where this doji is, we got a nice move down, and then we ended up breaking below the 10. And, that was, a smaller move. These contracts went from maybe 5 to 7. So what is that like? Okay, that's still a good move. That's almost 50% actually. So not too bad there. Broke below the 10, and then that's where you'd cut it and then wait for a reclaim or a 50 dip in this case, which happened down here. This was a weird day. I'm pretty sure this was a day where I think there was some sort of news going on, and these candles were a bit delayed, I believe. But yeah, we ended up breaking above the 10, breaking back below, and then finally ripping. So yeah, this that reclaim paid. This one didn't. So that was that. I did not take anything in this area. I might have taken this initial cross. I don't remember. But this side of the chart, there wasn't really much to take from besides this massive candle above the 10, and then, continuation from that. But, again, this is the 30-minute chart. So, like I said, I think we had the 595s earlier in the week, and this is where it was on Monday, I'm pretty sure, is where we ended up, right? The 30, 30 was the Monday. Like I said, back in one of these screenshots is where we broke below that 50 for a little bit, which was right here, and this was that day. So once it broke back below, we were still sitting at massive support on puts, which I showed you on the higher time frames. On the 1 hour, 2 hour, those were crossed. The 50 was trading up super hard, and then that pretty much ended up pushing us back bearish. So once this 30-minute chart went negative, we're technically neutral, but I still favored the bears because of that higher time frame support on the puts. The 1 hour 50, 2 hour 50 were still crossed. 50 was still up hard. So that ended up just pushing us back bearish. And 10 went above the 50. Market is back bearish. And then this was, I think a cross that happened on that same day or earlier in the day. So 10 went above the 50. And look at the move we got. Massive move that ended up flipping us back bearish. And, this is just a visual of the last 2 weeks of how hard this trend was, or not how hard, how aggressive it was. I have not seen a trend like this, I don't think, at all in the lifetime of me trading the system over the last 2 years. So, this was very, I loved the trend. This was beautiful. We were able to stay on the right side. I only took a few small losses with, those 50 SMAs being a little bit funky at times. But other than that, our winners have been 100-point plus trades pretty much every time. So, I can't complain with that at all. As you can see, that 50 SMA, it's a massive spot on the 30-minute chart, and that 50 was so sloped up. This thing was sloped up super hard in this picture. 50's trending up super hard, massive support area, and you can see this is why, like I said, the system, it does so well in trend. Why? Because we know the exact spots of where to pretty much short the rip at. It's that 50 SMA. It gives you those major pivots. Then another good thing about the system, it gives you pretty much the entries on a lower time frame with the 0DT charts. So, maybe that 50 dip will be a 0DT 50 on the call side on the 0-day chart, or maybe the calls ended up crossing and then we hit the 50, okay, and then from that 50 we end up bouncing and those calls end up going negative, which gives us that short entry to pretty much buy or short the rip at that point. We know, it's very simple. We're just playing 10 50 SMA crosses, both positive, negative, and we're playing 50 SMA bounces. whether that's on the 0-day chart or the 30-minute chart on the Friday contracts. But typically, I don't just buy the 30-minute dip. I usually wait for some sort of entry on the 0DT chart just to give me a more like pretty much precise entry and safer entry. But yeah, I mean, that's pretty much what we did throughout the whole week and how we were able to stay on the right side of the market. I saw so many people on Twitter calling bottoms, calling for a massive rip, and it just never happened. I mean, it just never happened. So many people got bagged last week, and, you know, if your Furu was shilling you calls or buying calls, like 0-day calls, good luck with that, because, you know, they don't really know what they're doing. So, like, the market has been going straight vertical for the last couple months, and, you know, some people don't know how to trade like when we start to get, you know, a reversal. And a great thing about the system, you know, it tells us when that happens. We knew when the trend flipped bearish, that's going to be our focus. And until, you know, we go negative and start crossing negative on the higher time frames, we know that the bears have the trend, and we know exactly what to look for day in, day out. It's those 0-day cross on puts, 50 dip on puts, negative cross on calls, 50 reject on the 0-day calls. So, you know, a ton of opportunity this week, and it was a great time. I mean, if you guys are in the Discord, we got absolutely paid day in, day out. It's very simple stuff. We're just playing crosses, no charting involved, except for like overbought levels, which, you know, I went over in I think yesterday's video or the day before when we hit it, but I'm not gonna explain that here because this video is already going on like 20 minutes. So yeah, that's what we did throughout the week. If you guys enjoyed, drop a sub. If you guys want to learn, Discord down below. I know it's like $70 a month. It's because it's me and another guy in there, Colton, who made this whole strategy. So, you know, a ton of value in there. You're learning from the creator and someone who trades the system very well. And I've been trading it a long time, and, you know, I think I know it pretty well. So, yeah, that's the place to be if you want to learn. In my opinion, $70, that's nothing. You would have made that back and plenty more. You probably would have paid for a freaking year's worth of subscriptions if you're just trading one MNQ contract with the trades we gave out. So yeah, definitely worth the price in my opinion. Should probably be more. Should probably be like 100 plus. I know many Discords out there that are well over $100 that are just teaching you jack shit and just giving you like support and resistance levels. You know, not what we do in there. We give you the real sauce. You know, you don't even need to be in there to learn. If you watch all the YouTube videos, that's all you need. That is really all you need. I'm giving you everything right in front of you. All you have to do is put in the work, watch the videos, and you'll learn how these charts work. And, you know, I have a ton of videos, ton of videos on how I trade these charts every single day. So if you watch those, you'll do well. Well, that's all I got. If you guys enjoyed, drop a sub. Join the course if you want to learn. I'm out. Peace.